Welcome to TheoTRADE. This is Don Kaufman. It's July 19th, 2024. Just about 12 minutes to go to the cash close here on this Friday afternoon. Ooh, the S&P is taking a bit of a hit today, down some 46 handles, but look, I'm going to remind everybody that's only 0.8%. The Nasdaq's down. It looks huge, right? It's only a 1% move. Look. Bear tones kind of reverberating throughout this marketplace, but I'm going to show you specifically what to kind of look for moving forward, because there's definitely some areas right now that, leave a little bit, to be desired in terms of sell side activity. All right, let's get right down to business. All we've really seen at this point in time, well, 3 days of sell side activity does not make a bear market. But I will say there's some areas that they are pockets that are getting hit and hit hard. It's still very, very choppy sell side activity. It's still very cyclical, if you will. And that's something I'm going to talk about rather extensively in this weekend's update, is because when you're looking at sell side activity, well, like we're getting right now, what's weak? All right, so Microsoft's taking a little bit of a hit. That's put together about what? Really, this is in 2 weeks of sell side activity. Again, doesn't exactly make a bear market over there. Starting to look at pockets of weakness and areas like NVIDIA. NVIDIA broke through this 120 level. It's down, but it's definitely not out. What else you got? You look at Apple. I mean, come on. You're like 3-4 days removed from all-time high. Meta, some fairly wild trade inside of Meta. Now, this has actually done a little bit of damage, but there's like a bid back under it today. It's been fading. Again, this is not your prototypical sell side activity. In fact, I'm actually going to jump right now into the advanced decline line, because one of the things it really bothers me to look at an advanced decline line where, in this case, by the way, I am looking at the S&P 100. I want to make that really clear. S&P 100. I don't care about the S&P 500. There's even the S&P 100. There's only like 20 stocks that really make a difference to move markets. But it is interesting to look at the S&P 100. And right now, you got 67 decliners. People, that's not correlation. Like when you see sell side activity, you got to have like 90 products trading to the downside. You got to have like 93 products to see what we would term full blown, correlation out there. When I talk about full blown correlation, when sell side activity is choppy like it is right now. And I was talking about selling is still choppy. It's still cyclical. There's still some pockets of strength, right? And I'm talking about pockets of strength in here. Well, you don't have to go very far to see that. Look at Walmart, all-time high, literally today. Okay. Oh, but it's look, you're getting defense in what? Starbucks? Really? Okay. Bank of America. This is not really seeing any sell side activity. And I can't stress this enough, because when sell side activity is just on, and you're getting like punched into the close, you need to see high degrees of correlation to see degrees of capitulation. That is one thing that, look, as I said, it's bear turns reverberating through the markets, but you're not home yet. You're not even close to home yet, because if you look at this, and again, you be as objective as you possibly can, when you're looking at volatility, and we're starting to hit a patch of real volatility here. And there's no question about that. I'm not here to quite, well, is volatile? Look, you're starting to hit a patch of volatility. Okay. The S&P futures were trading what, 57 and change. Okay. Now they're actually trading what, 55.49. So you're off 150, 160 points, whatever. Come on. You've seen that kind of move to the upside time and again. And the one aspect I want to get into here is, look, I'm not going to deny that there could be a bid back on Monday, but I will say that if you're one of the people that are saying, don't worry, they're going to come in here, they're going to buy the dip, people that haven't even begun to sell yet, That's one of the points that I want to make, of course, in this weekend's update. The sell side activity, bleeding a little bit, but we haven't really begun to see any heavy sell side activity. You go, how could you possibly say that? Well, we're going to go to the bottom of my screen and you're going to look at some sectors. And does that look like it's really starting to see some sell side? I mean, some correlation has kicked in just a little bit, but here's, again, it's healthcare. I'm bringing up XLV, it's healthcare, whatever. Okay. I got it. The XLK, which is, technology, took a little bit of a hit. But here's the XRT. I mean, this thing, look, it was down this much, a couple of weeks ago. It was a few weeks before that. It was down even more. SMH, the semiconductors. All right, they're seeing a little sell side activity. But what you need to see, okay, and we don't see, but what we need to see is that selling starts to hit the market. When it starts to hit the marketplace, it actually causes what we term statistical arbitrage to kick in. And what StatArb will do, for those of you that don't speak geek, okay, when you sell the futures and you sell them hard, let's say those futures are down, for instance, 2%, it reverberates into every single product in there, all right? And that's what StatArb basically does is statistical arbitrage, okay, what it's kind of by design to do is it keeps the stocks in the S&P 500, or in this case, the S&P 100, keeps the stocks in the S&P 100 in line, okay, with the S&P futures, in line with the SPX, in line with the spiders, okay, moving in kind of a inverse kind of confluent situation with volatility futures, like it's all interconnected, okay? And right now, it's just not moving for me cohesively enough. So those that are looking at this, again, you're having some reverberations of some volatility, but you're not getting hit. So again, advanced decline line needs to display higher degrees of correlation. You're going to know when real selling kicks in because your correlation is going to pick up. It's funny because the irony is, as I'm actually talking about this, and there's 4 minutes to go to the close, correlation it's picking up a little bit to the sell side. All right, so I was talking about selling is still choppy, still cyclical. I mean, again, what I mean by cyclical is, look, they're buying crap that nobody's wanted to buy. Okay, don't worry, Starbucks will save us all. Okay, I mean, really? I mean, that's what we're coming down to over here. There's some stocks that are being bid up, like Walmart, not seeing any sell side activity. Look, okay, when they come for the marketplace, they're going to come for them all. And don't ever forget that. This time is different. It's never different when there's sell side activity. Okay, it's never different. Now, before I get into volatility futures, okay, I want to talk a little bit about exits. The exits are small. However, trade's been orderly. What does that basically mean? For those of you that are like, a little bit newbie, when I'm talking about the exits, okay, the exit is small because the marketplace is very large part. It's been a whole lot of Apple. It's been NVIDIA. And NVIDIA today, whatever, it's down like another, 2.9%. But from its high, if you actually want to look from like high to like where it is right now, let's actually zoom in on that. Okay, to right now, it's down about 15% from some of the recent highs. Okay, whatever. But we're not hitting it yet. We're not like pushing, okay, substantially lower. Like I don't see any like chaotic kind of trade. But one thing that I want you to be very clear on, when I say that the exits are small, people, look, there's only a handful of products that have really driven this marketplace. So if you start to push a heavy amount of sell side activity, okay, into something like a Microsoft, or we start actually buying huge amounts of put contracts, which we're not doing in Microsoft. If we start buying huge amount of put contracts specific to NVIDIA, again, I don't see it in here. Those exits are small and things could really get wild. Bid offer spreads could widen out. We're going to get all kinds of freaky at that point to the downside. Trade has been orderly. If we're going to see more selling next week, it's not going to be as orderly because at that point, look, people are going to have conversations with themselves this weekend, right? I know I will. The conversation with themselves is, man, I have sustained just some spectacular gains in this marketplace. It's 3 days of sell side activity. We're going to close at or near the lows, right? Because we're closing in 2 minutes over here. Look, we may go for it next week. And if we bounce, okay, if we bounce, almost assuredly, some traders are going to want to sell into that. So this is becoming a very precarious market very, very quickly. But the exits are small, but trade has been orderly. What, pray tell, is going to make this market less orderly? It's going to be an interesting feedback loop that is not kicking in yet. Now, I know a lot of traders are looking at VIX. They're like, the VIX is going higher. You got to forget about the VIX, okay? The VIX is my predecessor's of volatility instrument. So what? The VIX is going higher. The VIX is, again, it's nothing more, okay? It's just calculation off the SPX. But you want to look for, especially on an intraday basis, you want to look at vol futures. By the way, do not look at volatility futures and think like, oh, they've gapped up. This is a contract change in here, okay? A couple of monkeys looking at this thing. It's a contract change, and you can't even adjust for contract changes, so you have to click right here on 1 minute. I'm literally looking at an intraday like 1 minute on vol futures because if real sell side, and I was talking about this in Wednesday night's video, and if you guys watched Wednesday night's video, okay, we've been pretty much spot on looking for the lower expected move, and I'll get to that in a moment. But if you look at these vol futures, okay, they have not ignited yet. And I'm going to explain exactly kind of that feedback loop again. If the volatility futures start to head higher, first of all, why would they head higher? Because a huge number of traders, okay, are short, okay, front vol. They're short these front month volatility contracts, and they're long the back month vol contracts. And what happens, and here comes the closing bell, it is all over. Anyway, they're short this front month vol contract and long the back month as a hedge. But what happens in heavier volatility, okay, is the front month starts to really kind of move higher. And when this contract, which is up 4% today, when that goes higher, what in turn happens is those trading firms, they'll sell S&P futures, okay, to mitigate their exposure. And then when you sell S&P futures, what does that do? Okay, and then it reverberates right back into, of course, the S&P 100, and you start to get caught in a feedback loop. Now, I'm just explaining a little bit about how everything is interconnected. So what I just talked about, selling is still choppy and cyclical, the AD line, okay, that the exits are small, okay, but it all comes down to the volatility needs to take off. And the reason the volatility is not taking off is because correlation is not there. There's just no degree of correlation in the marketplace. So the marketplace doesn't feel all that threatened until it starts getting hit across the board, right? So you got to remember, when I say those exits are small, look, if you need to get something done, okay, don't sit around and think that the marketplace is going to wait for you. You could see some really wide bid offer spreads in here, okay? All the activity, okay, for umpteen months. It's NVIDIA. Like, what do you, I mean, NVIDIA is still up 144%. Don't get me wrong, it was up 190%, but now it's only up 144%. Look at something like Tesla. This thing was down 43%. Oh no, but still my heart, it's down on the year again. You look at something like Meta. You got me here. Meta's taken a little bit of a hit, but they're still up massively, right? So say whatever you want. The sell side activity, okay, although there is some, okay, this is not a big hit across the board. And that is what's going to bring some heat. Now, with that being said, okay, that basically what am I amounting to? First of all, right now the SPOOs are down 41 handles, market just closed, whatever, like who cares? Okay, it's 0.75%. So we're not heated is the point that I'm trying to make. What is a little bit more heated, if you look at the SPX, right? In the SPX, we are and just did close outside the expected move to the downside. The last time that we did that, it's sad, but I'm going to bring it up. Last time it closed outside the expected move, you have to come all the way back to what? Mid-April. You can't make this crap up. You have to come back to mid-April. There were times where we were close over here, but no, we cut into it. We almost crossed. Look. That's the first time we've crossed outside the expected move in quite some time. And I told you guys on last weekend's update, okay, that you should expect that kind of action. That you should expect us to crack expected move in there. So there's no question about it. This week started off with a bang to the upside. What's crazy is we almost hit the upper edge of the expected move, and we cracked through the lower edge. Overall, the range this week has been big, okay? But, look, $63 expected move. Now, what does this kind of amount to? Because I'm telling you right now, yeah, we broke the lower edge of an expected move. Yada, yada, yada. Don't be a volatility-starved animal. I don't care if we rally up on Monday. I think rallying up on Monday would be spectacular. I'll probably short into it. See, I can't short into that. It's called shorting into the hole. There's just nothing to do in there. So I got to wait for that bid back, and then I'll actually come in short. The only problem is right now, I think a lot of traders are going to wait for the bid back. See the bid back onto this marketplace. Look, you haven't seen correlation. Okay, the AD line is just way off. The volatility futures have not gone parabolic. There's a lot of things in here that just have not happened for volatility, which is exactly why it makes it that much more dangerous. If you're a volatility-starved animal, beware. For those of you that have no idea what I'm talking about with a volatility-starved animal, it basically means you got a trader like yourself that hasn't seen volatility in so long they don't even know what it looks like anymore. And we have 3 down days and they go, I'm going to go out and I'm going to do something. Okay, this is the time to buy. Or they're going to go out and they're going to sell puts into this, and they're going to get their proverbial head taken off of their shoulders. This is where you can get absolutely ripped apart. If you get a bid back onto the marketplace, okay, and I want to be clear about something. If the market comes ripping back up, that will actually be, okay, a great time to actually sell, not buy, sell. And that's the way that I'm going to approach early next week. The other thing that has obviously come to my mind, and I like to be fair and two-sided, what happens if we come back into next week? Okay, forget about news over the weekend or whatever. Come back in next week. Things could get freaky to the downside too. There's just no question. This market has been so parabolic for so long to the upside that you can't discount the ability for this marketplace to really tank. Okay. One thing, it just keeps coming back. And I talk about volatility starved animals. Okay. I know I'm a volatility starved animal, but I also know I've been in this business long enough that I haven't seen any 3% moves to the downside. Okay. The NASDAQ got smacked in the head by almost the tune of 3%, but it hasn't happened to the S&Ps. And until the S&Ps feel a little pain, we ain't home yet. All right. Last thing, I'm seeing expected moves in the marketplace. Oh, they're really starting to expand out. Look at this. Look at this. And you could just visually take a look. There's an expected move. Here's an expected move. Basically, okay, there is a volatility expansion underway. Okay, obviously, you're like, oh, yeah, the VIX, man. Okay, there's a volatility expansion underway. But you got to put numbers to it. If I go over to the QQQ, which is the NASDAQ 100, I look 7 days out. The expected move is like $11 in change. Okay, which, if you're kind of curious, what does that mean? All right, what does that mean in terms of NQ? All right, so if you take this expected move, which is $11, all right, and approximately 38 cents, you multiply it by 40 equals 455 points. So roughly the expected move, okay, as it pertains to the NASDAQ futures is 455 points. That still looks really low. Like last week, it was in the 300 range, but it still looks really, really low for the kind of trade activity that we've seen, given the fact that, hey, far be it for me to say this, but I think I saw the NASDAQ move down 600 points the other day, and its expected move is still not picking up. So you're learning something by looking at the expected moves. What you're learning, we're still very much volatility suppressed. I'm a volatility suppressed animal. All right. With that being said, the expected moves expand, and as we do each and every week here, okay, we like to look at the SPX. So the SPX cracked the lower edge of the expected move. Okay, the expected move this week was roughly $63. So you're looking for this move $63 higher, $63 lower. 63 bucks, that's just over like a 1% move. Well, you got the bonus plan. We moved more than that. Right, so the week started roughly here. Let's just call it 56.10. The week ended basically at 55.05. What do you got? Just about a 100-point move. Just round it, whatever. It's like a 100-point move when you're looking for a $63 move. So almost a 2 standard deviation move, okay, this week. All right, what are we expecting next week? So you just got off a 100-point move. What are we expecting next week? All right. Drum roll, please. Now, this is not set in stone just yet. Got a few more minutes before it's set in stone, but we're expanding out to an $85 move. So, ladies and gentlemen, boys and girls, that doesn't look like enough either. Okay. Come into next week. All right. Keep your risk in check. You have to dynamically shift risk. You've been trading in a 12 to 13 volatility climate. Okay. Now we're shifting, okay, into a gear that maybe you haven't been in a while. Shift gears or get your head taken off. If normally you're trading a couple of micros on an intraday basis, scale it back. Why? You're getting more movement, more bang for your buck. So have a lot of respect, okay, for what this marketplace is telling you. We are definitely on the verge of some bigger volatility. We're just going to have to play wait and see, though, if this marketplace is going to go for it. And I'm going to tell you right now, next week, strap in. It's going to be a long week. Forget about the Fed. There's nothing but earnings. It's the perfect week, okay, for degrees of volatility. And yeah, the irony is it's mid-July. Volatility in mid-July. Thanks, everybody, for joining us here at TheoTRADE. Have a wonderful weekend. Stay tuned for this important message. This is Don Kaufman reminding you, get your TheoTRADE 2024 live event ticket now. Now you can show up live in Scottsdale for unlimited trading horizons. That's September 12th through the 14th, obviously 2024. Go to TheoTRADE.com/24. This event you can attend live or you can stream it for the comfort of your own home. Again, go to TheoTRADE.com/24. One aspect that we've actually added to the page just in the last couple of trading sessions is we've actually got everybody's topics listed. The pre-event session, which is our cocktail party, it's actually going to be Don Kaufman versus Jeff Bierman. The Odd Trading Couple, Options Mega Geek versus Professor Chart Tweak. That's going to be a good one. In session day number 1, I've actually got myself, Professor Bierman, Tony Rago, Blake Young, Corey Rosenblum, Gianna DePoche, Brandon Chapman, and ladies and gentlemen, we have now confirmed none other than Tom Sosnoff will be attending, of course, the entire live event. So Tom Sosnoff from Tasty Live, of course, will be attending. Oh, check out also day 2 session topics, all skewed up. A Trader's Guide to Christmas Trees, the Parachute Trading System, Day Done, the Road, okay, to Daily Profits, Blake Young, the Money Flow Squeeze Strategy, and much more. Check out all of the event topics here. Again, this is TheoTRADE, TheoTRADE.com/24. Get your TheoTRADE 2024 live event tickets right now.